It's taking only our high probability low risk trade. It's taking only from yesterday high and yesterday low. So look at, let's consider everything here, everything from this day. When they wanted to go up here, what did they do? They took out yesterday low. If you were trading strictly from yesterday low and yesterday high, and you entered from here, you have possible 140 pips to catch. Your 3R for IOF, our main target is 235. So if I'm risking 1%, I'll enter 2 trades at 0.5, 0.5. These 2 trades can be at the same place or at different places. I'll be teaching the new class, that one, but I've done it before in Simply Pip general class. I'll just repeat it. But let's assume we enter at the same place. Once we move to R, which is 1% growth now, we'll close this one and break even. So worst case scenario, we have made 1%. If it goes to 3R, we've made extra. If it goes to 5R, we'll close out. So that will be extra 2.5 plus our 1 will make it a total of 3.5% growth. So somebody's mic is on. Okay. So here we can see we wanted to go up. We took out yesterday's low. Then we went up. I'm going to leave this one in between. We'll come back to it. This day, we wanted to sell. We took out yesterday's high. This day, he wanted to buy. He took out yesterday's low. This day, he wanted to sell. He took out yesterday's high. This day, he wanted to buy. He took out yesterday's low. This day, he sold a little. He took out yesterday's high. He bought. He took out yesterday's low. It sold. He took out yesterday's high. It bought. It took out yesterday's low. It sold all the way from here down. It took out yesterday's high. It bought up again. It took out yesterday's low. It sold down. It took out yesterday's high. It bought up. It took out yesterday's low. It sold down. It took out yesterday's high. I don't know if we are seeing the trend. So remember what we're discussing is high probability, low risk trade. So it means that if I trade from yesterday's high and low alone, without considering anything yet, there's a possibility for me to have high probability, low risk trade. High probability, the tendency for it to happen is there. Low risk, I'll be risking 1%, and if I lose, already we are gallant losers. But we know that it's possible for us to get 3, even up to 5 return on investment. So that's the first thing. We are targeting yesterday high and low. Now the question now becomes, I'm on my way up. I've taken this trade on this day after I took out yesterday's low. Now let's look at the characteristics of the remaining days. The characteristics of the remaining days, and that characteristics is divided into 2. Number 1 is that it will trade into yesterday's body. You can see. Okay. And the best way to think about buying is when it takes out the Asian low. So I want to buy. I want it to trade into yesterday's body. And take out Asian low for me from the Asian low, then I'll buy. Second characteristics of this is that I want it to be at least inside a H4 or H1 OB. That is the best way for us to do this. So high probability low risk trade is taking out yesterday high and low, but that will not happen every day. This one took out yesterday's low and we bought. What about this day here? This day, how could we have taken this buy before now entering this sell that took out yesterday's high? How could we have entered this buy? We can enter the buy if it trades into the close of the previous day and if we have Asian low. So let's continue. So look at this day here. This day took out yesterday's low and then bought. On this day, it traded into the close of the previous day, then moved up. Look at this day, it took out yesterday's high, then sold. This other day traded into the body, that is the close of the previous day, Asia, then dropped, right? So same thing with this day. It traded into the close of the next day, moved. This one too, close of the next day, move. 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 I don't know if we are seeing the trend. So, and that close of the next day is like you are doing discounts. So usually if we are using this way they'll say, okay, you for a buy, they'll say it went up, then came back and closed. That's the way they'll do it. So for a buy, it pushed up, then closed. The next day has to trade into the body of this close. So the next day we trade into the body of the close, move up, then close. The next day we'll have to trade into the body of this close, move up, then close. So this body close here, this beginning here will be in Asia session or Asian low, then we'll buy. Asian low, then we'll buy. Let's go for the sell. So this took the high of this day, then sold. This traded into the body of this day and sold. This traded into the body of this day and sold. This traded into the body of this day and sold. But if we are to use high probability, low risk trade, you will notice that we can't trade most of these days here. We'll only be able to trade this one that took out the low, this one that took out the low for a buy, this that took out the low for a buy, this took out this low for a buy, this took out this low for a buy, this took out this low for a buy. Those are the only ones who can trade on the buy side. If we look at high probability, low risk trade, on the reverse side, this took out the high for a sell. Then we will not sell on these 3 days again because no other one came back to take out the high for us to sell. So how do we trade these other days? We have to look at trading into the body of the next day in Asia, then drop. Trading into the body of the next day and drop. Trading into the body of the next day and drop. So let's go to the chart now and look at it. We are going to start from this date here. This is 26th of May. So we'll start from 26th of May and start looking at what we have. So we are going to go to 15 minutes. We'll go to 15 minutes and we'll go to the 26th of May.
You sit down.
So this is 26th of May. I'm putting it side by side, our MT4. So on the 26th of May, price traded down. We are not bothered about 26th. We are going to start from 27th. So 27 took out the low of 26th, then bought. So this is 26th. See 27. It took out the low of 26. Then we started buying. You see, it took out the low of 26. The low of 26 is this red line. It took it out, then started buying. That's what we want to look out for. Now, so when it takes out the low and start buying, I'm going to draw a diagram here. Let's say this was yesterday. This is yesterday, and price traded like this. What we will like to see is something like this for the next Asian session. We want to see something like this, or something like this, sorry. When it traded into yesterday, it now consolidated and entered into Asia for the next day. Then the Asia for the next day came down, took out this one, give us something like a W, then buy. That's what we will want to see. We want it to sell down. So usually to be like, it started the day like this, it manipulated to the upside, sold to the downside, then maybe in New York, it pushed up and consolidated. So when you consolidate like this into the next day, what we want to see is for it to come down again, take out this low, and then we buy. But it's not all of the time that the next day comes to take out the Asia. Sometimes, it's not all of the time that the next day comes to take out the low of the previous day after Asia. In other words, this is today's Asia. It broke like this, then came down to take yesterday's low before buying. These are perfect trade, but it's not all of the time it happens. There are some times that yesterday will be taken out in today. So you see yesterday's low inside Asia. It has taken it out already in Asia. So by the time we are waking up to come to our decks around 7 o'clock, the buy has already started, right? So remember, if we want to buy, it has to take the low of yesterday. We'll be happy if it takes this low during London, then we'll buy with it. But if we're asleep and this low that was taken happened in the night, this is what we'll see. We'll see yesterday's low inside today's high and low, inside today's Asian session. We'll see yesterday's low, YL, inside Asian session. And it can take it out in Asia. Once you take it out in Asia, to just start running. By the time you wake up, you will not see opportunity to enter, to just be running. In this situation, what we need to do is that we allow it to run because we don't know where to enter from. We allow it to run. Then when it starts coming down, we'll draw our fib and wait for it at the 61.8 to buy. And our stop loss will now be at the low. So we'll enter from here and we'll target. So let's look at that in the chart. So you see on this day, this red line is yesterday's low. It took out yesterday's low during Asia. It took out yesterday's low during Asia. This is what we traditionally want to see. Back to 15 minutes. Let me show us what we want to see traditionally. Let me use EA. Lots of examples in EA for this. So this 15 minutes. Okay. This is what we want to see normally. You can see this now. Yesterday high is above, yesterday low is below. So it traded down, pushed back up and consolidated. So throughout Asia, it was consolidating and we want to sell. If we want to sell, we'll just be waiting for them to first go back up, take out yesterday's high, then we will now sell. But there are some instances where this yesterday high will already be taken inside Asia and the sell would have started as when you and I are coming in the morning. So what we need to do is we'll wait for them to pull back to 61.8, then we'll continue the sell and our stop loss will now be here. So as we do it, as we do the back test, you'll see examples. So this day, they took out yesterday low during Asia. And by the time we woke up, they've already started going back up. So what do you and I, what would we do? We will wait for them at 61.8. Now, if you draw your fib, your normal fib, so that will not be confusing us, I'll use the AQZ fib. It's still the same thing. If you come to the settings of the AQZ fibs, you will notice that we'll have 50% and 61, this should be 61.8, right? So, but we can use 62.5, they are almost like the same thing. That is where we are waiting for price to come back to, for us to buy, 62.5, 61.8. So, they've taken yesterday low already. Then they started buying. So what will you and I do? We'll draw our fib. They started the buy already. We'll wait for them at 61.8. This is where we enter our buy from, with our stop loss below. So I hope we are getting that. If we want to buy, we want it to take out yesterday's low. That's the high probability low risk trade. Take out yesterday's low, then we'll buy. So this is 27th of May. Let's come back to daily here. GN. Right, so we just treated this day, 27th of May. Now the next day is this one. Or let's treat high probability low risk trade first. Then we'll come back and look for the other ones. High probability low risk trade, it must take out the low before we buy. So this did not do anything. It didn't take out any low. Look at this one, this day. It took out this low. Then we started buying. And which day was that? This is 2nd of June. So we'll go to 2nd of June and see how we would have traded that one. All right, so this is 2nd of June. So look at 2nd of June. It took out Asia session. It took out yesterday low in Asia session. Look at it with this dot, with this point, started buying. But then as at the time we were coming to the market, it's dropping again, no problem. So we are waiting here for us to get a buy. We are waiting at that point for us to get a buy. And there are many things that could have happened. I have the 13 EMA here. With the 13 EMA, once this thing crossed above, I might have entered for a buy. Then it hit my stop loss and came back again. Then I'll enter for a buy and then move. Already, you know, we are not too scared of taking losses. We'll take them, right? That is one way to take the trade if you are using 13. The second one is simply to use the LSB. So if you're using the LSB, this is the last bullish candle before this drop. Price didn't take it out. This is the last bullish candle before this drop. Price took it out here. If you had entered again, definitely to hit your stop loss, LSB or no LSB. Then this is the last bullish candle before this one. By the time this is crossing 13, you're also getting a close above, so you can enter. If you're using BTB, you will not get an entry here because it didn't come back. But if you're using LSB or you're using close above the 13, that is your trade, and that would have given you something, right? It basically just moved. So again, this is taking out yesterday's low for a buy. It's a low probability, a high probability, low risk trade. So that one too is done for 2nd of June. The next day it took out a low was this day here, 10th of June. It took out this low before it started buying. So go to 10th of June. Another date where it took. So here again is 10th of June. Again, it tapped yesterday's low in Asia, but by the time we came up, it was selling. right? So again, it dropped down, gave us something that looks like a W here, closed above the 13, and then we went. That was our massive move to the upside. Again, if you are scared, you might take 1 or 2 losses. So let's say you actually woke up in the morning, you saw this close and you took it, hit your stop loss, then came back here and gave you another one. You recover all your money and more inside this move. So this one can give us 1:3, 1:5, and the likes. Because now you are entering upon the close of the 13, which is somewhere there. You started from here, close above the 13 here. So that's where you're taking your trade from. And then it basically gave you TP1, TP2, TP3, TP4. Yeah, basically gave us TP4 doing that. Again, note, we only entered after I took out yesterday's low. So we've treated this day. That's 10th. Next time it took out yesterday's low again is this day here, which is 15th. On the 15th, it took out yesterday's low, and then it went up. So go back to 15th and check 15th. This one day, is it 15th or 14th now? Let me check again. 15th, took out yesterday's low and pushed up. Okay, I'm comparing GN on MT4. Okay, no wonder this is, let's come here. This is GN, GBP NZD. I was noticing that difference. So let's check GN on which day is that? This is, okay, let's go back to this day, 10th of June. So come to 10th of June here. 10th of June. All right, so this is 10th of June. It took out, these are perfect trade where yesterday high and low. Asia is in between yesterday high and low. Asia is in between yesterday high and low. Asia is in between yesterday high and low. That's the perfect one we want. We want to wake up in the morning and they will manipulate to go and take yesterday's low, give us something that looks like an M, close above the 13, and boom, that's our trade. Depending on where you entered from, this was your low, that's your close above your 13. They came back again. So if you entered at that point, and if you put second, well, let's take it only one. You enter at that point, you have 1, 2, 3, TP3, TP4 before it goes. And that is a possible 95, 96 pips move. All because we were just waiting to trade after it took out yesterday. It took out yesterday for us to buy. So this is, which day was this? 10th. Let's come to the next day. The next day here is 15. On the 15th, it took out yesterday's low and went up. So come to the 15th. All right, so this is 15th now. Again, this is the perfect one we want. We want it to be in between Asia, this blue box, should be in between yesterday high and yesterday low. We wait. We will not enter any of this one here, except we are doing a scalp. We wait. They must come here for us to take our trade. Once they came, they tapped it, they gave us our W pattern, close above the 13. We are in this trade. We are in this trade. And straight up, it gave us 1, 2. 2R, where we would have taken our first take profit when we discuss the risk management. But again, that was a powerful trade. And if you are somebody like me, you don't like staying in the market too long, I don't even used to do TP5. If what I want is 2% per trade, you can take your 2% off at TP2 and we are out. another day, anybody wants to eat the remaining can eat. But just watch, it was yesterday's low that I was taking. So we are not going to take any trade outside yesterday's high and low for the high probability low risk trade. We'll come to the next day. It happens to be on the 17th. 17th came back and took out 16th, then pushed up. So we are going back to 17th. Here it is. Now remember what I said. This took out Asia inside, this took out yesterday's low inside Asia. It took out yesterday's low inside Asia. So the only way we could have traded this is to draw from our low to the high point as at the time we got to the market. If it pulls back to 61.8, we take our trade. This did not happen this day. So it's going to be very difficult to get a trade here, except you are scalping. Very difficult to get a trade there. All right. So the next one is this day. It took out yesterday's low at the 21st of June before buying. We'll go to the 21st of June. Again, look at it. It took out yesterday's low during Asia. Then by the time we woke up in the morning, it was just at yesterday's low. Fine and good for us. Once it closes above, we are entering. Why? We can enter here, no problem. We can also do what we said. It took out yesterday's low in Asia. We'll go to the highest points and wait for it to pull back to our 61.8, which you can see that is PE. Or you simply just enter at that point and take your trade up. That played out, and that gave us our TP as it continued moving for the remaining of the day. That was a winning trade. Again, yesterday's low. Now let's go briefly for the sales before we move to the next part. For the sell on this day, it took out yesterday's high, then sold. That happened to be 22nd of June. So 22nd of June, this is 22nd. Yeah, I can't see how it took out yesterday's low here. I can't see how it took out yesterday's low in June, so that might be broker's feed. Oh yeah, there is something that went wrong. On Oanda, they have this long wick, which did not show on some MT4. We have some long wick that didn't show on MT4. So if that long wick was not there, the high and low would have been here. Somewhere like that. So if you notice this, it was a flat top. It didn't have that long wick that Oanda had here. So this was the takeout of yesterday, high, and then this was the drop. So we'll discount that day. So every other day here, there's practically no bias, no high probability, low risk trade because it was just dropping. The question now is, if I'm trading GBP, NZD, GBP, USD, EU, let's say I want to trade only 3 pairs, and I'm looking for high probability, low risk trade, does that mean that I won't get trade every day? If you're like us that want to trade every day, which is why we try looking for scalping techniques that we can be using while we're waiting for IOF to play out, how can I trade these other days here? I already know I'm supposed to buy or sell from an OB. So how do I trade these other days here? Remember, we stated that if I want to, after this day, let's put a horizontal line there, a vertical line like that. Okay, so after 22nd, the next day is 23rd. I will want to trade if 23rd pushes into the close of 22nd and go down. So let's go back to 23rd. So this 23rd, it pushed back into the body of the next day. Look at the whole day here. It pushed back into the body and then dropped. That's the one way we can trade. We can trade continuation days. But if we are to keep with our rule of trading only in an order block, there is no order block here for us to trade, right? At least for the second day. The first day has another block, basically. This is a bearish candle formation. I'm using only the body here. This is a bearish engulfing stuff. So when price trades back into the body here, I can sell. When price trades back into this body, that is a selling trade. So this day is 23rd. Because of the long week here, let's use MT4 for this. This is 23rd. So if I go to 15 minutes on the 23rd, yeah. So this is trading into that point. It started dropping, then gave us our M formation or whatever, close below the 13, anything we want to use, LSB, everything played out here. And that is the drop. Remember, we started selling from the previous day. So we are in a downtrend. We are trying to catch the next day's downtrend. We'll be looking for order blocks to trade. Now, there are instances where you can't find the order block on the daily. This one, it was easy for us to spot out, okay, this is a bearish engulfing using the body close, and we can say, what about this? How do we sell? How do we treat this sell? So there are two ways to treat the next day. So the first way is that there is a gap between this candle, and that gap needs to be filled. So we can draw our line on the gap. Right, so this is a gap that needs to be filled, but that doesn't happen all of the time, just like gap didn't come to be filled here before it dropped. But it's good, you have it. If price comes to fill that gap, fine and good, and gives you your entry pattern, you sell. If it doesn't come to fill it, you still have options. So the first one is a gap. If it comes to fill the gap and give us our reason to sell, we will sell. If it doesn't fill the gap, what is the next thing we can do? We'll drop down now to 4 hours and see if there is a order block here that could have supported our sell. So go to H4 and check, is there an order block, source, breaker, all of those long story that could have supported our sell? So let's start and check it. This was the last bearish candle responsible for this high. Once price broke that last bearish candle, here we entered it, we became bearish. So upon a retest of the bearish candle, we will sell. So we are sellers after this point. I don't know if we're getting it. This is the last bearish candle before that high. This is the last bearish candle before this high. Every other thing happening here is happening inside this high. This was where it broke and closed below this last bearish candle. So we're in a downtrend here. So when price comes back to test our breaker, and normally we would have done this like this to delineate our breaker. Right? So when price closes beneath it, if price comes back into it, we are sellers. So now we have both showing us our gap, and we also have IOF based on OBs showing us that we should be looking for sell. But we will not sell until price push back up on the daily. If you come back to the daily, you can see here we have our box showing that there is an order block in H4, but you can't see that order block on 15 minutes, on daily. And we want to sell on this day. We want to sell on this particular day. So now we have two reasons to sell. We have the line to cover the gap, and we have this small gray area there signifying a H4 order block. So if we go back to 24th, We'll go back to 24th. We'll now see how price played out. Number one, this was a break, price retested, and remember we are selling. So price has traded back into the body of yesterday in this week, right? Because look, this is yesterday's low here. Price has traded back into it already. And remember, the rule is that if Asia has already taken out yesterday's low and it has started dropping, what should you do? You wait for it when it starts pulling back up and draw your fib and enter at 61.8. So this is yesterday's low. We don't like yesterday's low to be inside Asia somehow, right? So, but in this case, it happened and there's nothing we can do about it. And that's the breaker. It has traded into it and is about dropping. So our entry is going to be from that high to the low. High to the low. We woke up, it was dropping. We can't jump in, we wait for it to come back. It came back for us here. This is 61.8. That's 61.8 there. Gave us our M pattern, then melted. That is the trade. You have to wait. You have to be able to plan out how you intend to take the trade. And rule number one, we don't trade outside an OB. If we want to sell, it takes out yesterday's high. If we want to buy, it takes out yesterday's low. If I started buying already, we draw our fib and get in at 61.8. If I started selling already, we draw our fib and get in at 61.8. So let's look at the last day. The last day happened to be this day, Friday. So this is Friday. Again, we are going to use the same methodology to determine how I want to take this trade. Again, we have a line there. That is the fair value gap that we'll be anticipating price to come back to drop. If it gets there, fine. If it doesn't get there, no problem. One thing we are sure of is that we'll only enter if it trades back into the body of this candle. So, and how do we know that? If it trades back into the low of yesterday. So I'm going to use a different color of line to delineate this. This is yesterday's high, and this is, yesterday's low. So price must trade back into yesterday's high and low today for me to be able to sell. If it trades back to this fair value gap, very sweet, because now the sell will even be more. So let's go back to 15 minutes and see how we would have traded it. Back to 15 minutes for Friday. Okay, so on 15 minutes on Friday, when we woke up, it had already traded into yesterday high and low in Asia. Look at it. It has traded already in Asia, yesterday high and low. Because this blue line is yesterday's low, it has already traded into it the next day, as at Asia, and started dropping. We said if it starts dropping, we are going to draw our fib and take 61.8. If you draw your fib from that point to this area here, right, it dropped all the way down, and we are calculating at 61.8. Look at it there. And it happened around yesterday's low. It gave us our M formation too. If you want to use close below 13, it used it. If you want to use LSB, it basically gave us 2, and then it dropped. Profit were not much. Of course, it's Friday. It gave us another entry again, and then it dropped. So what we are going to do this on another pair, maybe GU this time, or somebody should give us one pair amongst the 9 pairs I mentioned, EG and the likes. It works like magic on GU and EG. The best pairs so far, GU, EG.
EG.
Which one did you say? EG?
EG.
You like that pair too much? So let's go to EG now. Euro GBP, here we are. We are going to go to the daily time frame. So the first thing we are supposed to do is identify where we are. I'll start from here. Then we'll start taking it down gradually. So look at this day. It took out yesterday's high, then dropped. This day took out yesterday's high, dropped. This day took out yesterday's high, dropped. This day took out yesterday's high, the next time it's coming down. This one took out yesterday's low, bought. 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 Took out yesterday's high, sold. Took out yesterday's low, bought. Took out yesterday's high, sold. So what I'm trying to bring out here is the fact that there are two things we are discussing simultaneously. Number one is low risk, high probability trade. It happens from yesterday high and low because we know exactly what we're looking for. We can just draw the high. So like on this day now, we can simply just draw the high of this day. Once that green candle came and took out that high, if we want to scalp, we can look for our LSV, everything that will happen after it has taken the high and scalp. We will not get much pips, but we have possible 19 pips, and eventually when it dropped, 43 pips. EG is not too pipful anyway, so you understand. So let's look at this week then. How could we have played this week so far on EG? So I have a bearish order block here. This bullish candle responsible for this drop. This bullish candle responsible for this drop. When price traded back into that bullish candle, I'm a seller. When price traded back into that bullish candle, I'm a seller. But I won't just want to start selling because price traded into a bearish order block. I want to sell when I'm confident it has taken yesterday's high. So when it took yesterday's high, that is when the confidence came for a sell on this day. So let's check this day. This happened to be 1st of June. Drop to 15 minutes and go to 1st of June. Okay. So here we are. First of all, 1st of June is yesterday's high. It took it out. If I had entered a trade somewhere around here, assuming I'm anticipating a sell because I'm already in the order block. This line is showing order block. When it closed below, if I enter a sell, sorry, hit my stop loss. Sorry for my loss. If I'm still awake and I enter a sell here, again, fine and good. It played out the next day. But if I decide not to enter a trade here after taking the loss, this second entry happened outside my kill zone, and I'm not interested in entering again. Here is my next trade, right? Once it took out the Asian high, I'm in for the trade. So again, let's remember, I'm selling. I'm inside and I want to buy or sell inside an OB. If I'm buying or selling inside an, number one, I want to buy at yesterday high. I want to sell at yesterday high or buy at yesterday low. Number two, if there is a gap or there's an OB on H4 M or daily, I want to trade it. Number three, if the trade has started moving, I will enter at 61.8. Number four, if Asian high or Asian low has been taken and I'm inside an order block and it gives me an entry condition, I'll take it. So here we have Asia. Remember, you enter officially, you are supposed to have entered from here, but you missed that trade. And then this is Asia high taken, and this is your close, you enter one way. Second way, if you don't want to use this method, you started, the sale has already started from yesterday, and you are just finding a way to get in now. You simply draw your fib from the highest point of yesterday to the lowest point of today before it started pushing back up. And you can enter at 61.8 and take your trade down. So the idea is, if the move has started, wait for 61.8. If the move has started, wait for 61.8. So for many of us that stay in front of the chart, you will notice something like this. You want to sell on a particular day, Asia started, London sold, and you miss the trade. If you take a walk, about 50–60% of the time, if you walk away, during the break time between London kill zone and New York kill zone, this thing will pull back. If it's still going to sell, if New York is going to sell, it will get to 61.8 at New York open, then to continue to sell. So if we miss this, we'll enter here. If it started in Asia already, we'll wait for it to pull back for us in London and we'll enter. All is waiting for us at that point. So here we have the move for entry, and we also have Asia high taken. So that happens to be on the 1st. So it sold. Now look at this other day here. This second day, which happened to be 3rd. So on the 3rd, okay, no, we have 1st. We'll go to 2nd. On the 2nd, we are still inside the OB. Okay, no, I think we've treated that now. We've treated 2nd. On the 3rd, how can we, what are we going to do for the 3rd? It has to trade into the body of the previous day and give us our pattern to sell. So we will do 3rd and 4th together, right? So if you notice for 3rd, there is no fair value gap to be covered. But for the 4th, we have a fair value gap. So we are going to draw a line for the fair value gap. So that's our fair value gap. We always want to put our line for fair value gap where we expect price to come back to fill the gap, then continue. If that happens, fine and good for us. So price traded straight into this and fair. We are going to look at 3rd and 4th together. 15 minutes. We go to 3rd and 4th of June. Okay, so this is 3rd. Again, remember the rule. Remember the rule. 3rd, it traded back into the body of yesterday high and low. Right? It traded back into the body of yesterday. This is the Asia session. It took out the high and then it dropped. It took out the high and dropped and traded back into the body of yesterday high and low. So this one has worked out. The next day is for fair value gap. So it traded and covered the fair value gap. It traded, covered the fair value gap, and then started selling. Unfortunately, even I myself would have found it difficult to find an entry here on this particular day. The only way I would have gotten it is using 61.8. And to be able to do that, we have to pull our fib from the beginning of the move. That's where there will be a challenge. I don't know if I should use this or if I should use this. If I use this to count the move, this will not get to 61.8. If I use the Asia to count the move, this will get to 61.8. Whatever the case, it's easier to explain because this is hindsight. In real life, looking at this chart pattern, it would have been very difficult for me to catch this the sell of this second day, except if I'm in a sell already from the previous day. BTMM guys will call this a 50-50 bounce. Those of you that know how to trade BTM, maybe you catch it because it gave you several M formations there. It gave M, then dropped. But I don't know if I'll be able to catch it. So that was that day. So let's hasten this up so that it won't get too long, just so you can see. Look at this day too. It took out yesterday's high, gave us an M, and then dropped. This day traded back into the order block and then dropped. But depending on how I want to trade it, this was yesterday. If I'd entered the first trade, lose, enter the second trade, lose, I'm no longer in this trade. This other one took out yesterday's low. See that? Took out yesterday's low and then bought. This one took out yesterday's high. You see that? And then sold. High probability, low risk. High probability, low risk. This is 11th of June. Let's go to the daily and see what happened to 11th of June. 11th of June on the daily. Here we are. So how could we have traded 11th of June on daily? Clearly, you can see it. This is a bearish engulfing, which we call an order block. So when price trades back into the order block, first point of call is the blue line for fair value gap. But it has to trade back into the order block. So once it trades back into the order block, it gives us our entry for a sell. So it has to trade back into it. So for those of you trading daily order block, this is the setup that we like. We just put our entries in 3 places. Anything you want to do, stop loss above and take it. But if you want to trade off 15 minutes, your stop loss could be smaller. You wait for your entry pattern first. So it traded into the OB and covered the gap simultaneously for a sell. Then the next day, took out the high of that day again and sold. So we're going to look at the 2 days together. So this is 11th and this is 12th. So okay, so this is 11th of June now. Make it smaller. All right, so this is the OB. This is the other block we're looking at. The blue, that's the fair value gap, I beg your pardon. That blue line is the fair value gap. So it traded into the body of the next day. And if it trades into the body of the next day, this is the Asia high. It took out the Asia high, gave us our pattern close below our EMA, if that's what we want to use. If it's LSB we want to use, same thing. Last bearish candle before the high, it broke it. Then we sold. This is EG. It's not too peepful, but it can give you what you want. Then the next day, again, it went up and took out the high. Look at the high. Took out the high. It gave us our M pattern too, up there. That's it. Then sold. This particular day, I doubt if I've been able to trade it. I'll only have traded it if I'm looking at Asian low. But on the daily, I don't know if I would have seen a reason to take that trade, or I would have taken it and it would have hit my SL. It was basically a buying day. I can't see anything on this screen that would have helped me to want to assume a buy. So the only reason is Asian high and low. And I can't just trade strictly based on Asian high and low, except if I'm using the 30-minute scalp. So on this next day, it dropped. Once that drops, we are happy because now it has given us an OB to work with. So we have an OB. Anytime it comes here, we are sellers until it breaks it. Anytime it comes there, we are sellers until it is broken. So for next week now, we have a bullish OB here. If price comes back down, we'll be looking for reasons to buy until it is broken. So for these 2 days, we are basically sellers, which is 18th. No, which is 21st. It traded up on the 18th, then 19th we became sellers. So let's use that to wrap up. '18th, 19th. Yep. So this is 19 now. That was yesterday high there. It just went straight into yesterday high, gave us our M pattern, closed below, and then dropped. So in summary, what we are trying to say is that if you face yesterday high and yesterday low alone, we'll have high probability, low risk trade. It will happen about 2 to 3 times in a week. Let's just say 2 times in a week per pair. So if you are looking at 3 pairs, you can get 6 high probability, low risk trade on those ones. Whether they'll happen the same day or not, it's a different ball game. Then if you are able to draw your OB on daily, it will help you to trade. If there is no OB on a daily and you actually want to trade, then you can now drill down to OB on 4 hours to be able to trade it. When price trades into your OB, you are looking for fair value gap to be covered. You are looking for Asian high to be taken. You are looking for it to trade into the body of the previous day for you to sell. If the sell has started already during Asia and it continues as London opens, you wait for them to pull back to the 61.8 and then you sell. So I forgot to mention, let's go to 4 hours here on EG. We didn't do 4-hour pattern on EG. So on EG, this is, let's remove all the objects. All right, that's the issue of 4 hours, very noisy. So here we have this order block to the downside, order block to the downside. When it came back into this order block, we would have been looking for reasons to sell. It actually gave some sells. There's a gap here that was covered. It took out that. It didn't close below it, then dropped again, then gave me another order block. The 4 hours is noisy for me. And any day you don't understand it, you just let it go.
Yes, ma.
The 4 hours is noisy. So I wouldn't have looked at 4 hours because I can't interpret anything here. Order block resistance for the low, order block resistance for the low. It came back here. If you are using only 4 hours, at this point, you are looking at opportunity to sell. So if you didn't sell and broke above, you'll now be looking for opportunities to buy, which is what we do like in XUZ. So you would have caught this buys here. Then when it broke back down, we would say it's invalidation or violation. You'll now be looking for sell. So let me pause.